Hello, everybody, and welcome to the Daniel Wynn podcast. Today, I want to share with you one of my favorite subjects. We're going to talk about real estate private lending and why you may consider becoming a private lender this year and into the future. I'm going to give you some pros, some cons, and some things to think about for why you might want to be a private lender or just get the knowledge of what a private lender actually does. So, let me begin. Currently, in this new year, we are having an extreme demand for our services, which is great, right? Lead generation, we got many people calling our office looking to borrow money for their real estate projects. Now, of course, you got to sift through all these deals because not all loan requests are going to be approved. So we're looking for a specific type of borrower with a certain amount of equity to keep our risk in line and to help these investors, these real estate investors, entrepreneurs, to accomplish their dreams, but also to protect our money because we're investing our own funds in these deals and we have to always have protection. And that's the first thing I want to teach you about becoming a private lender. Protect your principal. So let's get started. Why you might want to consider private lending, the definition of it and how it works, and the role private lenders play in real estate deals. So like I just said, we get these loan requests and people are looking to pull cash out of properties, buy a property to fix it up and sell it, or they need long-term rental loans. We don't keep the long-term rental loans in-house. We source those out somewhere else. But the other loans, the cash out and the purchase and rehab loans, we do in-house. And what people are doing is basically what you see on TV. You got real estate investors that are buying properties that need a remodel, and they're buying it with their own money, they're remodeling it, they're putting it back on the market to sell, or some of them keep them as good rental properties. So that's the market we serve. And real estate investors love dealing with us for some reasons I'm going to go over in the future and shortly here. But the thing that for private money lenders is that they get to earn an awesome yield and they get to choose what types of deals they're going to fund. So I'll give you a basic parameter for me as a private lender. I want to lend my money on loans that are under 60% loan to value. That means that if the property is worth 100, I'm not going to lend more than $50,000 or $60,000, right? By doing that, I have a spread in case something goes back, right? The difference between the 100 and the 50 would be 50,000. And having a $50,000 spread is a good rule of thumb, minimum when you're lending out your own money. The bigger the spread, the better, right? So the difference between private lenders and banks is this. Number one, when you go to a bank for a loan, they're always going to require tax returns and they're going to require a full appraisal. Private lenders like myself, we use an interior broker price opinion, BPO, and we don't ask for tax returns. We ask for some bank statements to show cash flow, and as soon as we get the necessary documents in, we can close. We can often close these deals in under 2 weeks, right? If you go to a bank, the typical turnaround time for a rehab loan is going to be 4 to 6 weeks. So this is why real estate investors like using private lenders and paying a premium for the money, right? Paying 10, 11, 12% versus 7, 8, or 9 at a bank. People will pay that extra percent. And if you have a low loan to value and you can get a 12% yield, that's a winner every day. So what are some of the pros, some additional pros about being a private lender, right? I just told you that you can get an awesome rate of return, like up to 12%. Well, believe it or not, you could earn actually more under certain circumstances. If people had a lot of hair on the deal, maybe some taxes that were due, or some breakup, divorce of a spouse, or divorce of a partnership, and they have some entanglements on the title. Sometimes we'll charge them 14 or 15% because it's really a deal that is going to be turned down by most lenders. But if I like the loan to value and I like the property and I'm okay with working through the situations that they don't pay, I can charge 14 or 15% and you can earn 14 or 15% if you could find these deals in your area or if you want to work through us. So obviously getting a high return is the goal, but more importantly, like I spoke about earlier, it's more important that you protect your principal, right? Nobody wants to lose principal. So when you make these loans, you have to be able to know that you're going to get your money out no matter what. And we have been very good at this over the years, and I'll share that with you in the future on some of the stories that look like they were disasters that turned into total wins. Passive income potential. When you originate private money loans and you get them serviced by a third-party servicing company, I would recommend. I don't want to wait for the checks to come in and wait for the checks to clear and then figure out if the borrower is on time or not. We use an independent third-party servicing company, and they ACH the money right to me. The borrower is set up. At the end of the year, they do all the accounting, they send out the 1099s, and it's a very nominal fee for the service that they provide. But the number, so you're getting a passive rate of return, 10, 11, 12% every month. Let me give you an example. I was at the C Bank a week ago, and they were telling me that they could give me, for 100 grand, they can give me a 2% return on a CD. So after 12 months, I could earn a whopping $2,000. Well, I didn't want to lock up my money but I entertained them. I listened to the banker. And if you do it, when you do a private money loan at 12%, well, 12 times 100,000 is $12,000. So you could earn $12,000 return on a $100,000 investment if you put your money out as a private money lender versus leaving the money in any bank that's paying 2%. So this is one of the great reasons, or one of the main pros, why people love becoming private money lenders. Okay, so let's talk about some of the cons and risks. What happens if a borrower can't pay? So if a borrower can't pay, the first thing that I recommend is that you work with them to figure out how to solve the problem. There's different reasons why they might not be able to pay. They might have overestimated on their cost. They might be in a partnership disagreement and somebody's got the money and the other person doesn't want to pay. That happens. But whatever the reason is, it doesn't matter. It's a conveyor belt in my mind. If somebody doesn't pay, I do my best to work with them, including advancing more funds if they've done the work that they said they were going to do, or the majority of the work, and there's still this cushion that I could work with equity, because as they do the work to rehab a property, the value goes up and up and up. So I do my best to work through the problems with them, and if they don't pay and we don't come to a mutual understanding on how to solve the problem, then we just turn it over to our attorneys. And what that looks like is you send a file over, they begin the foreclosure process, and it takes a certain amount of time, 6 months, a year, 2 years, depending on which state and county that you live in, for this process to happen. In the meantime, so what do the costs look like, right? On average, if the foreclosure goes the whole cycle, let's say it takes 2 years in Chicago as an example, it's going to cost approximately, with the attorneys that we use, about $5,000. Now, you could find attorneys that'll charge you $15,000. I would advise you against that and tell you to do some comparative shopping. If you need recommendations, let me know. I have some wonderful people that I would refer you to. But it's $5,000 over a 2-year time period. Sometimes people don't pay their insurance, so we have to insure the property. And you always want to have property insurance in case of something unfortunate happens with the property, vandalism, destruction type things. And so that's another cost, a couple, $2,000, $3,000. So here you are, you got this money that's output, you're not collecting the monthly payments. So that sounds like a negative situation, right? And it would be if you didn't underwrite the file properly. Let me tell you what the benefits are when this happens. If you made a conservative loan-to-value loan and they increase the value, or the value's increasing, then you have a lot of spread as that time frame is taking place to foreclose. We add a default interest rate onto our mortgages and loans. So if the note rate was 12% and they go into default, we've had 18%, 20%, 24%, and higher. And over the last 3 years since COVID ended, we have collected a tremendous amount of money in default interest, the full balance. And the reason why we've been able to collect so many of these is because our lending was at a low loan to value. I can't emphasize that enough. You really have to learn how to not overlend with your borrowers. So what are the legal and regulatory considerations? If you're an individual, you can lend in most jurisdictions as an individual. If you're a corporation and you're lending out of state, then you have to do a foreign registration. Your attorneys can help you with that. The title company would help you. But overall, you should know the regulations for the state that you're lending money in. Most private lenders can lend in almost all the states without any form of licensing. That's the good news. You just got to find the right deals, have the right law firm or document preparation firm to put these loan docs together so you are protected. You build in these default interest rates, you build in these other potential fees. We have loan mod fees, right? If somebody goes longer than the 12 months, because we do 12-month loans, you can charge people additional fees for loan mods and extensions. And you could even, if a deal goes bad, you could even, when you do the extension or loan modification, you can add a exit fee. So, they got stuck, some partner left them, you needed to add another $20,000, they're gonna make $50,000, $100,000. You can add a fee for exit. So you got the upfront fee, when loan origination fee, you got your servicing, and you could even get a exit fee. We have a lot of deals where we help people that are in distress, where we add exit fees. So you get paid, once again, as a private money lender, at closing, throughout the life of the loan, and an additional when they pay off. Win, win, win. This is why I encourage you to consider private lending in your future. Whatever percentage you want to do, 10% of your portfolio, 15. Some people I know are, and like including myself, I'm probably closer to 40 or 50% of my portfolio. I like doing this. I put the money, I recycle the money in my communities that I lend, and I know that I'm adding value to my community and to the people that are borrowers with me. So how do you get started? Well, the first thing you need to do is get a little bit of training. There's a lot of training online. We also can offer you some training. If you don't want to actually be the lender yourself, then you have to find a good private money broker who can find these deals, who has deal flow, who can bring these deals to you so you get to pick through them. We have we send out emails on a regular basis announcing some of our new loans so our lenders can see them on a regular basis via email, and then eventually you can raise your hand and say, hey, I'd like to see the full package on this, and then we share that with them, go over it, and then they can decide to fund it or not. So you need to find a good broker. If you don't find a good broker who knows how to put the docs and everything together, then you have to find a good real estate attorney with experience in private lending. Just because they're an attorney doesn't mean that they know all the rules and regulations of private lending. So it's really important that you find a lender that has that skill set. An attorney that has that skill set. Okay, so if you need a good broker, you need a good mentor, you need an attorney, and you basically from there, you can fund your first deal. That's when the fun begins, right? You start seeing what it's like to receive the monthly payments. You start seeing what happens if they don't pay, or they missed a payment. If you have to deal with challenges, you learn about that. And you learn that it's all just a process, right? There's nothing hard or magical about it. It's just a business, and it's a great business because if you're thinking about becoming a private money lender, if you can get the right deal flow, people can bring you these low loan to value or these valuable deals. You get to just, from your home, your computer, at your desk, sitting on your deck, at your kitchen table, you can decide, yes, I'm going to fund that deal. And all of a sudden, that $100,000 that was getting almost 0% interest at the bank is now paying you $1,000 a month, or pretty close to it, right? $1,000 a month. going back into your account versus $100 a month. Win, win, win. So tools and resources. There's associations for private lenders that you can join, right? The American Association of Private Money Lenders. There's different organizations that have seminars and webinars throughout the country. We offered some training online that you can have on YouTube. If you like what you're learning here, subscribe, forward us to some of your friends, refer us to people, because we've been growing this business for a very long time. We're very successful at producing good loans, helping the community, and getting our money back. And that's really when you want to start celebrating, right? Some people like to celebrate when they make a loan. We like to celebrate when we get the money back. So in conclusion, private money lending is a great alternative to the other investment vehicles that are out there. You can get a fixed rate of return, much higher than the banks and other institutions are offering, secured by first mortgage trust deeds or mortgages around the country, and you can help regentrify and help these entrepreneurs to make profits doing this hard work, beautifying America one house at a time. See you next week.